Katie Benner is the chair for this panel. I am actually filling in for Joanne Hill, who had a death in the family and so was unable, sadly, to join us today.
Great. Tanya, thanks so much for that. It's wonderful to be here on this rainy day in LA, which we never get, so that's fantastic. And I'm really happy to be on this panel with Tanya and with Gudrun Neumann, who is the CTO of American Century Investments, and she also spent 16 years, isn't that right, at IBM? So a long career both in technology and in finance, which will give us a great perspective, because I think that in the big talent war, tech and finance are two places that are highly competitive with one another. Now, this panel is about new opportunities that were created by a variety of factors, including the financial crisis in the financial services industry, especially fintech, lending, credit, money transfer, and new ways of looking at investment portfolios. We've seen that connectivity has been the key to all of this. So with the rise of connections, we've seen the rise in cybersecurity and the need for security because of the attack vectors growing. And then also we've got some stuff totally out of left field that nobody could have imagined, including things like Bitcoin and cryptocurrencies, the blockchain. What do we do about this stuff? Will it really take off? How seriously should we take it? So this is sort of the open field that we're going to be exploring for the next hour or so. And I sort of wanted to kick it off by asking the panelists, about what they think the real cutting edge things that are changing the world of finance and technology. What are the things that we should be looking at right now? And I don't know if, Tanya, you want to kick it off, the topics that you are most interested in, but there is a lot out there.
Well, I think the greatest cutting edge opportunities right now are going to be, and I'll speak on the financial quant side, I think it's actually going to be people who can bridge the multiple voices that are necessary to take forward what's going on in the industry. And what I mean by that is people who can comfortably sit at the table, not only with people who aren't necessarily quantitative, but with the technologists. I think that the world has changed. When I started on the street, the IT and the technology and the programming and data areas were minuscule. I mean, they were a couple of people.
And they were in the basement.
And they were, yes, in the basement or behind a door.
Right.
Yeah, and the door, or in an office that was an entirely interior space, right, with no windows. I mean, it was really grim. And I think that today, I rarely see the launch of a trading strategy where the technology people are not sitting at the table discussing everything from the business planning all the way through to the launch. And then frequently have folks sitting on the desks. One of the things Gudrun can talk about is all the different places that her department sits in what her roles are. They sit in many places that they did not sit before. And I think that's an important point, because the people I think who will be the most successful are people who can speak the many languages. So I think you need to understand the analytics, but then you need to have an understanding of the technology. You need to be able, when there's databases involved, to understand what that means. What is the database and the database administrator? And how do you actually not only just put stuff in it, but how do you get stuff out of it? And how do you think about planning for that, which is totally different really than being on the analytics side of the industry, but you can't do one well without the other. So I think that's going to be a huge area. I think another place is going to be anywhere we can shorten the line from point A to point B. And what I mean by that is that, whether it's the people who have money to the people who need it, shortening the line by not having it go through several intermediaries, but perhaps using a technology platform. Or, Bitcoin to me is fascinating, not because of the need for a virtual currency, but more so for what it is operationally. What it means in terms of what transactions costs can be and how quickly we can actually get stuff done. And I think that's going to be revolutionary to the financial industry. Again, not because it's a virtual currency, but because of what it will do operationally. So I think those are the two that I would really
Sure. I think before we jump into sort of what, how some of these innovations have changed the world of finance, Gudrun, I'm wondering if you can talk a little bit about maybe your career then, because the person who Tanya just described in her first point, who can bridge the multiple voices between the technologist and the financial services people, this sounds like you. And so, having worked at a place like IBM and now working in finance, and I'm wondering if you could talk a little bit about how that works, how that's important, what those meetings look like, what those conversations are like.
Oh, absolutely. Let me just start by saying that we didn't really talk about this in our prep, but the blockchain technology is on the top of my list as well. Excellent. As interesting things for the future, so we should circle around.
Yeah, we'll definitely go right back to that.
I think that's a really interesting topic. So. I've been, working for a very long time, and I am right now in the buy side, so I am on one of those ocean liners or those ships that Rosemary described, and my job basically is to run the ship, okay? So everything from, now talking about business, everything from the music in the ladies' room to, sitting with our quants and working with them on their models, that's all in my purview. I also have the lovely role of doing some operational functions. So we talked a lot earlier today about the dirty data. That is another piece of my world, which is something that we do every day, which is making sure that the data is clean so that when we value our funds, because our firm has a big portion of our business is mutual funds, and every day, as opposed to pricing 4 times a day. We heard that today from one of the panel. 4 times a year. We are pricing our products every single day, and it has to be right. So there's a lot of data cleansing that goes on in that world as well. So that's my role. Background, I started as a programmer at IBM. IBM at the time was really big in tech. I did very different things, and I really think that was helpful for my career. I did software development, I did some IT and IBM as well, and I ended up running outsourcing deals. And what was most interesting there for me is I learned all about the P&L, because I owned a P&L. So not only did I sell deals to clients, and I've got to get back to the salesmanship here, because I think it's important for everyone in this room to understand the value of that. But I learned what it's like to run a business because I was committing to my firm, IBM, every year. I was committed to deliver a certain amount of P, right? Profit, not the other one, loss every year. And I was accountable to pull the levers to make those decisions. And I think that's been very helpful as I'm sitting at the table in our financial company, working with my peers and all the departments on what's going on, because it is always, we could all be perfect if we had all the money in the world, but it's all about, my favorite expression, the juice worth the squeeze? So is what we're investing in technology worth the outcome we're going to get? And there is an infinite demand for technology, always in every company, and the demand will always exceed the supply. So how do you figure out where to spend your dollars? It's a very critical part of the business of financial asset management, and it's a critical part of my world.
Sure. And then we'll switch gears then and go back to Bitcoin, because I think one of the most exciting stories that came out this year, I don't know if people saw it, I was really curious, was that Blythe Masters decided to go work at a Bitcoin company. And now if you don't know...
They might not know who Blythe Masters is.
I was going to say, if you don't know who she was a derivatives pioneer. And Tanya has spoken earlier about how in her career she was able to look at places where people weren't going, that weren't as popular, and really take them on as opportunities. And you saw a lot of women going into derivatives for that reason. And of course, it became a hugely important business. So you have a pioneer in that industry leaving the world of traditional finance, leaving JP Morgan to go work at a Bitcoin company. Because her thinking is, this is going to be the next big thing. I've already done this once. I've already jumped on the train early once. I'm doing it again. And so she went to, I think it's called Digital Assets? Mm-hmm. And it's a really exciting thing. So I'm wondering why you think We'll start with you, Gudrun, why you think the blockchain is so interesting right now.
It's the same reason that Tanya mentioned, taking out the intermediary. Because, the whole idea is, and I'm not an expert in this by any means, is that each network component is trusted. So if I trade with you, I don't have to go through somebody else that's going to, hold the collateral to make sure that we do a handshake. That I can trust you and I can deal with you directly. And that, in my opinion, is, again, from a standpoint of taking out the cost of doing business, which ultimately is good for all of us, right? The investing public, because it's going to give us more yield, is really, really interesting. How this is all going to work out, we don't know, but we've got our eye on it to watch. And it's very similar, in my opinion, to what happened with electronic trading. We talked about that a little bit ago. We have a lot of experience with that in our company. We have on staff in our technology department, very much at the table, no longer in the back office, a fellow that helped develop the FIX protocol, which is a protocol that really started electronic trading, years ago, and has just continued to work now into settlement. So we're now, as an example, doing almost 90% of our international settlements are automated through this FIX protocol. Again, handshaking, taking out middlemen, which reduces our error rate, reduces our costs. So that's why Bitcoin is of interest, or the blockchain technology rather, is of interest to us. It's a potential efficiency play.
Sure, and Tanya, you advise all sorts of asset managers, and you're talking to people on the street all of the time. How seriously are they taking Bitcoin? Is this something that everybody is watching closely? Are some people ignoring it completely?
Well, it's bifurcated. I think that some people are watching it as a currency and saying, do we need to be able to trade this thing? And I think on that side, people are slower to worry that it's a big threat just from the standpoint that the regulatory piece is so uncertain and what the reporting around it'll be, or what your ability to actually even do transactions. I think what you can actually think about there is just you can think about Colorado with the legal pot and the fact that people can't get banking relationships for all the cash because the banks don't want to break the federal laws.
Right.
So they don't want to take, so how do you actually even go pay your IRS bill? You gonna fly to Washington with suitcases and stuff? Seriously, there's actually a big there's a big transactional problem, and I think that Bitcoin as a currency raises many regulatory and other issues. However, taking the bifurcated part, looking at the piece on the technology, okay, let's just think about some places where it will have immediate and astronomical impact potentially, right? Just as a way to do transactions. Think about something like Western Union, right? You guys have probably seen the signs, heard about it. They actually, Western Union, still transfer astronomical amounts of money around the world. People going and saying, I want to send some money back home, and the fees are enormous. Okay, so if I can find a technology to help party A with money talk to party B through some other mechanism, right? Even if I only charge them half, I am going to be extremely wealthy. So there are some places where the line between A and B is still too long, right? You can think about it, whether you want to think about it in 3D printing, how that's going to really change how things work. That's shortening the line, right? You don't need to have someone build a prototype, go to a factory, pay for 100 prototypes when you only need one, right, on the minimum. So I think that Bitcoin's in that category. I think it will really change the credit card business. I think it will change the cash transfer business. I think it'll change how we take money from other people. I think it actually will get leapfrogged because of cyber. I think it has many special ways to have identification that will solve some of the problems that we face in cyber because of the old-fashioned communications that exist in the world.
But on the other hand, the opposite side of that last comment is there's still a trust factor with the blockchain technology, certainly as it relates to Bitcoin from what you read. And this will ultimately only work if there is trust in the different network components. So that's, I think that's still to be worked out.
And I think that trust is one of the things that post-financial crisis, it was a word that got thrown around a lot, either because client trust relationships have been broken, because the system clearly wasn't working as we believed it would be. And so that's one of the reasons why people are, of course, interested in Bitcoin. And then we have the whole issue of trusted systems under attack. So, and this is a place that I'm very curious about as well, because it's a huge opportunity, again, for people involved in financial mass cybersecurity.
Yes.
It is the number one problem of almost every company in America now. Everybody's ramping up spending and everybody's looking for a solution. And a lot of the solutions that are being created right now are machine learning / algorithmic solutions. So I was wondering, Gudrun, if you could talk a little bit about why that's become more important for a mutual fund company.
I think you're absolutely right. It's the biggest problem facing all the companies globally. And it's a huge opportunity for everyone sitting in this room to apply what you know. Okay? So even if you're not interested necessarily in finance, but you're looking for a way to apply your math skills, this is a potentially huge area for you. So why are we concerned about this? There are two reasons, right? As our company, number one, we've got to prevent ourselves from being attacked. We've got to protect our data from being leaked from the inside, right? So that's number one. So it's us as number one. Number two is we've got to protect our clients, and we have clients that deal with us directly. They don't go through an intermediary. Okay, so people call us directly, or most likely are doing it on the web or on mobile. And we have to protect them to make sure that when they say it's them, it's really them. Because, I think that the amount, if you look at the millions and millions of data breaches that have been in the press over the last few years alone, and it keeps going up every year. The Anthem breach, I'm a personal victim of that one. It was, 80 million people. You too?
Yeah,
Okay.
me three.
Okay. So, everybody, we are assuming now in our client servicing world that anyone who calls, that every one of our clients has potentially lost their identity to some bad guy. Okay? And so when they call in and they want to transact, and why is this important for us in general? It's because we're custodians of clients' money. So it's very, very important. We're all financial firms, the banks, everybody is very much under attack because we have money, right? And the bad guys want to get the money. They want to get to that money. So we are doing a lot right now and we've developed some of this on our own because there isn't that much available yet. We've developed our own risk profile, if you will, based on certain transactions and behaviors from clients. That goes back quite a ways. Based on certain patterns of transactions and behaviors, we flag, someone who wants to redeem money, so take money out. We flag those potentially, and they go to a risk area, and that risk area then explores it before we take any action on the transaction request. So that whole, so you've got the whole behavioral analysis from a client. And then the most interesting thing, and the one that keeps all of us up at night, is how do you know that someone isn't in your network? How can you look at the behaviors of all those packets of data flying around in your network, many of which are encrypted, okay, which is a good thing. But how can you look at those and know whether it's something bad or something good? And that's where the machine learning behavioral analytics comes in. There are some firms now, we own some components of this, that are starting to work on this. There's a firm named Bit9 that we're very interested in. Palo Alto Networks is a vendor that we use today. They are working on this, and there's some others. Again, very much a Silicon Valley kind of an approach. And so that's what we're looking at from a client side. I'll just make one other point. There's a firm that we're very interested in named Pindrop, also a startup, not interestingly enough from Silicon Valley originally, that is interrogating telephone traffic data. So calls coming in, because by the way, it's very easy to spoof a phone number. Right? I can spoof a phone number and it makes it look like it's you when it's really not. It's really coming from a call center somewhere run by the bad guys who are very organized now. They're they're working like corporations.
Because they're making money too. They
Yes.
want to be organized.
And they want to do it as most efficiently as possible. So there are call centers out there that are working the phones
We're not
every
recommending
day.
jobs there, but
No.
It's a competitive market.
But anyway, this technology actually interrogates the network traffic to determine whether it's, potentially fraudulent. So that's another thing we're interested in layering in. So we have basically doubled what we're spending on this whole effort over the last 5 years. We don't see that slowing down. What that means for all of you is, your ability to analyze data, draw conclusions from it, see patterns is a huge opportunity. Even from a perspective of academic research on this whole issue, because every single company in the world is going to need antidotes.
It's interesting. So I speak to a lot of cybersecurity firms out in the Valley all of the time, and what they tell me is that their number one problem is not the technology, it is not coming up with something new and innovative, it is finding human beings who can help them. They are so short of employees, because when you look at traditional tech employees, they can't do what a security firm needs. They don't have all of the pieces. Somebody who's a great programmer for Google is not a great employee at a cybersecurity company, because they're not thinking, as one guy told me, they're not thinking paranoid enough, they're not thinking careful enough, and they're not good at thinking about systems overall in exactly the way that you need to think about them when you're constantly under attack. So this, if it's a field you're interested in, trust me, you will find a job very quickly. And then Tanya, I'm wondering if you can talk a little bit about the investment portfolio side, how some of these new technologies have really changed the way we put together our portfolios and look at risk, whether it's the rise of the ETF, which some people already, if you read sites like Bloomberg, there are a lot of stories about how risky this has gotten, or whether it's the way that personal finance is being changed by technology.
Sure. So I think it's being changed irrevocably. One of the things we talked about on the panel earlier on portfolio allocation, for example, was these slices of equities and bonds. And I think I mentioned before that we're at a place now, because we have technology and we have data, where you can think about the periodic table of risk elements. And actually there are stocks that look like currencies, that look like bonds, that look like credit, that look like hard assets. And in many ways, in thinking about portfolio construction and what should happen when in a portfolio at life cycle, so how should you invest at 20, 30, 40, 50, I think all of that is going to be turned really on its head as we go through the next decade, both in terms of trying to help to move those ships of, okay, I know you are all looking at it this one way, but here is a superior way. Well, it doesn't take very many people getting superior returns for other people to have the incentive to take a look at changing the way they're doing things. The world's a very competitive place. As a fiduciary, which most asset owners are, there is a requirement to look out for the best interests of people. And if you find something that's actually superior, whether it's a cyber protection or a new blockchain technology that gets you cheaper execution or a new way to structure portfolios. So I think that in asset management, we will have huge change driven by this. And a lot of it is coming out of the Valley. It's because, as I said, during the last panel, there's so much inquisition of the larger firms right now that their ability to do new product development and to actually pursue a lot of these new areas is very limited. And so it's happening, as happens in markets in other places, and much of it is actually in the Valley, which is why the products you're talking about are coming out of the Valley.
Right.
Some of the new credit products in terms of analyzing default risk are coming out of the Valley. Some of the underserved markets that aren't able to get loans through the traditional mechanisms are using crowd financing
Yes, peer
platforms
financing,
and
yes.
peer-to-peer. So
huge.
you can go in and purchase now portfolio strategies of others, right? And you can put your own up online and have other people buy those. So I think we're going to see massive change there.
And do you think we'll see a day when, because so much of the innovation is happening around credit, again, it was another post-financial crisis huge opportunity. Do you think we're going to see a day when there are new companies coming out that could be replacements for S&P or for Moody's or for Fitch or for the FICO score?
Maybe we should let Christina answer that question. I think we will change the FICO score. I think we will change how we do credit analysis. I think that we will also, because we're able to now study things like big data, we will be able to actually make loans to people at much lower ages than banks were comfortable making loans in the past. So I do think that there will be big changes in credit, if for no other reason than actually the behavior patterns have changed in terms of how much leverage individuals take even in post-crisis, and how they think about living beyond their means.
Interesting. So I want to switch gears a little bit, and please, in the audience, if you would like to comment on the next couple of questions that we discussed, jump right in, because this has come up in a lot of the conversations I've had with the panelists, and then other conversations as well around the opportunities we've just described, whether it's cybersecurity, Bitcoin, going into a startup that analyzes credit. They're huge opportunities. But there's story after story coming out about how, especially with Bitcoin and with cryptocurrencies, women don't want to get involved. Countless stories with headlines like, these are impenetrable boys clubs, women don't want to be there, they have no interest in this stuff. And I'm curious as to why that is, or why people might think that it's been hard to get women involved in things that clearly, at least from what we've talked about on the panel, feel like really big, interesting opportunities where you have a financial pioneer like Blythe Masters jumping in, just going in because she understands that it's an opportunity. I don't know if maybe we can start with the panelists and then maybe some of the audience.
So it is a very interesting question, and one of the things that Tanya mentioned earlier today is that potentially one reason is that there's more competition for the women now, and there's more opportunity for women. So as a result, because of the competition, it's very hard to get concentration in any one area, right? I mean, that is definitely an interesting theory. What I have read as a result of our prep, I've done a little work on this, as I read recently, is we still though have a gap. Let me just talk technology for a minute, because I think it applies probably more with cyber. We still only have less than 20% of the comp sci students today that are women. And in the 80s, when I got into the business, that was 30 to 40%. So why is that? So yes, it's true. There are more opportunities for women. That's probably true. But why are there so few women going into computer skills? And I haven't studied the math aspects, but I assume that's not necessarily great, and the people in this room probably have the answer to that. And one of the things, there was a Wall Street Journal article just last week that published a report from Reuters about this very topic, and the conclusion is that there's a certain element of women, especially in undergraduate, not being comfortable in the comp sci courses. I see some heads nodding.
Yeah, a lot of nods.
Because if you're the only one in the room and the guys are all doing their thing and they're all clubby and I'm all alone, I just don't want to be, all alone. And so there was a sense of that being an impediment. And so this study concluded that those women then drop out, even though they liked it, but they have other opportunities, right? So if it's not this, maybe it's a different field of engineering, maybe it's science, maybe it's finance. So that is potentially one of the answers.
So I want to make a couple comments on this. The first one as to feeling, locked out of the boys club or whatever else. I mean, I think in my introductory remarks I said, when I started in the field, you could count us all on two hands, and we all knew each other, and we all really helped each other out. And now the number of people who you can actually pick up the phone to, and hopefully you will allow to pick up the phone to you when you're sitting in our seats, is growing. They're in different fields. To that point, I actually want to read an email that Joanne Hill wrote to me, because there's a point she made in it that was one of the points she wanted to make on today's panel. She starts off saying it's been a hard week, but life deals us the good and the bad, and we need to cope. One thing that I was thinking about in prepping for the panel, perhaps one reason the progress on advancing women has slowed down in financial services is that today there are better opportunities for women in other fields, so that in a relative sense, there may be more competition. When we started our careers, it was such a challenge in all fields except nursing and teaching. So why not try, because remember, Joanna and I go way back, so why not try in financial derivatives where there was innovation and job growth? Let me pause right there for 1 minute and say that, it's really true. If you look around at what happened with derivatives, many of us started in our careers with derivatives starting shortly after that. And because we were the people who had some quant skills, and again, remember, without not suffering from the blinders, we saw this thing strolling by called derivatives. And they said, well, do you want to work on these derivatives? And it looked pretty interesting, and we did. And as they started to grow, and they were only in the billions at that point, not the trillions we have today, not even the hundreds of billions, they said to us, well, you're ready to be a manager. Why don't you manage this derivatives thing? Because they didn't think it was important. And we took the jobs manning derivatives. And if you actually look at the history of derivatives on Wall Street, a huge proportion of the large trading desks were run in the areas by women because they took those opportunities. Let me go back to finish this, and then I'll make a couple of other comments. Today, the applications of mathematics are broader in the financial field, but also in other fields, and there are other areas competing for talented women in grad programs. This is why we need conferences like this to make sure financial service opportunities can be highlighted relative to technology, market research, medicine, the sciences, et cetera. And I think that is true. I think that today we've gone through a few topics, a very few, and right now we're sort of like on the land speed record of throwing out all these different things going on in the Valley and the new developments. And I think it is important to know of the tremendous opportunity in it. As to why there are few women, I'm not necessarily convinced it's at least once you start in your career because there's a glass ceiling. It's always been my experience, and I hope other women who are senior are gonna either agree with me or challenge me like crazy right now. But I'll say my experience is if you were willing to do the same work, which sometimes was 100 hours a week, and sometimes on Friday at 4 when you thought you were going to the Hamptons, instead you went to the airport for the overnight trip to Singapore. Okay, and it meant you might not get to go to the school play because you had to go to a meeting, but if you were willing to do what the guys were doing, you could be just as successful, and you could end up running big departments, big divisions. I'm sure, Gudrun and the other senior people sitting here, Katie's a very senior reporter, has worked in phenomenal places in her career as a journalist. I think all of us will tell you that we were just willing to do whatever you had to do to be successful in that role. So I think part of it is you need to match what you want to do with the price that you're willing to pay to do it. Don't pick a role where you're not willing to do what other people in that role are doing in terms of the hours or the dedication or the learning you need to do, or because you won't be excited about it and you won't be as successful. And I'm sure this is a big group of overachievers, really bad for overachievers to underachieve. So pick something where you can be, the overachiever. But in my experience, I felt that you could get to the top. Gudrun's running she's got the top spot. Many of the women you've heard from today have the top spot, either in academics or in their professional, and I think it's because they did what needed to be done. So, in terms of the risk-taking piece, that's the risk-taking. It's actually in a calculated way saying, wow, there's that opportunity going by. That looks interesting. I'm going to go do that thing, and I'm going to do whatever I have to do to be successful. So whether it's Blythe Masters going into the Bitcoin, whether it's starting in the early derivatives, whether it's moving over now into a lot of the exciting stuff that's happening in portfolio management or, data mining or whatever, The opportunities are extraordinary. If you are interested in being in the FinTech side, they are desperate to solve their diversity problem, okay? Send in a resume, they will talk to you because they are in the spotlight for not really having a very diverse workforce.
Of course, of course. Did anybody have thoughts on this topic? Sure, please.
Yes, I would like to comment on. I don't need
No, it's to be the video.
Oh, the video. Okay, yeah, thank you. I wanted to comment on issues that were raised right now. So maybe my perspective is a little bit of a European perspective. I run a quant finance program in Free University of Amsterdam, very successful quantitative finance and risk management program. And it is difficult to attract women to this field. I think the main reason for that is the correct, in a way, perception of things that you said and how many hours you will have to put in. And I think it's a misconception in a way, because what we see in Europe in terms of job market is that only a small fraction of quants go to the banks, where they are expected to do 80 hours a week, which rightfully so, many women just don't want to do. Sure, of course, why would they? However, a large part of our graduates go to companies which have much more women-friendly working attitude, such as pension funds and insurance companies, central banks, the regulators. In Europe, we do not keep money so much in managed companies such as here. People put it in insurance and pension, through real pension funds. And you can succeed there, especially nowadays, without having these silly hours and old boys network with whom you will have to compete jumping on the planes and so on. So I think it's important to change the perception of what kind of career and what kind of what does it take then to succeed. Mm-hmm. So I think once we are able to do that, to really raise awareness of various career options for quants, and especially for women quants, I think that's when we will be able to attract more women to this field. So of course, if the only thing you know is Goldman Sachs and 100-hour week, sure, nobody will come. But if you know that there are plenty of other opportunities, and especially in regulation now, risk management, the whole landscape of financial services is changing so much. So for example, all the pension funds, insurance companies are now under Solvency II, and they really don't know what to do. They need all the quants they can get to cope with the risk management that is now being imposed on them. And the career opportunities there are excellent and much more family and female women friendly. So I think that is important to stress when we try to recruit women to this field.
Was there somebody over here? I saw like some commotion. Was there somebody over here who wanted to say something, or was that just a okay, some head nodding. All right. I saw some commotion. It's interesting too, because the startup world is another. It's not just finance. The startup world is it's long hours. Mm-hmm. I did a year at a startup. I have a lot of friends who work in the Valley, and for them, the idea of an 80-hour week is nothing. And a lot of them live and work in the same spot. They live close to their offices. So it's a very interesting thing. I think you're right. It's matching. What am I willing to do? What hours am I willing to put in with where you want to be? Certainly, absolutely.
Europe is a more friendly place.
Sure. I think everyone thinks Europe's friendlier than the U.S.
She's recruiting for her program.
So if you want to go to Europe, I think I know who you need to speak with right away. It's interesting too. Just to add a couple of things. I was speaking with some folks over at Andreessen Horowitz, and one of the things they say again and again and again about the people who get in on technological innovation first are the people who understand that what is actually going to be a big deal starts out looking like a toy. Sort of like how for Tanya in her world, what starts out looking insignificant, like it doesn't really generate any money, it could be the next big thing in finance. In technology, let's see, we have Facebook, started out looking like a toy, huge business, crushing Google, going to crush Google's advertising business, and who knows what they'll do in video, right? Bitcoin kind of looked like a gimmick, right? Mm-hmm. probably won't be in the future. Countless example after example. The first Apple computer. It was like, who's going to use this stuff? Are we just going to play, who's really going to use a computer at home? Well, all of us, everything now. So it's being able to see things first. And then the other thing is that oftentimes you just have to accept the fact that it's not going to be comfortable. That it's like going to a mosh pit where the guys are saying everybody can join, but it's a mosh pit, and do you really want to jump in? Well, you have to just make that decision eyes wide open. Yeah, please.
So I just wanted to comment on the fact that, maybe taking both of these conversations together, you can do and be close to what's happening in the world of financial technology without necessarily doing the startup. Yeah. Because we're all in our tech firm, we're very aware, in our tech department, we're very aware of what's happening with the startups around us, the estimator that was commented on earlier, and some of the others, some of the robo-advisors. And it's our role to understand that and figure out how does that inform our future. Okay? How does that bring the outside in? What does that mean for what kind of development we're going to do with our staff the next 3 to 5 years? So if you're interested in the combination, I would tell you financial technology firms or financial firms and working on the technology side, either in the quant area or in tech itself, will get you exposure to the new, because we have no choice but to be aware of the new. Without having to necessarily, if you don't want the lifestyle of the startup, you don't want to be in the startup, if that's not your risk profile, if that's not your hours of work profile, I think there are lots of different ways to do both.
Sure. And I was wondering, are there any questions? Yes.
Maybe I can add a remark on Gudrun's remark about there's women getting less and less in technology. Yeah, getting less and less in technology. I think we're talking about futures for finance and cyber and everything. When we think about futures, it's not just about people in this room. It's about our children.
Yes.
And I'm a mother of 5 years old, and I see when my son are playing with the girls of the same age, the boys are more natural to go to computer and then, grab an iPhone and everything and started doing something. Well, I see more girls playing with Barbies and all these dolls. It's actually the influence of the parents in terms of subconsciously or some way of educating their kids also. And I see also like Tanya and me, so because we're mathematicians, so I think we are consciously, and I can see many mathematicians who say they got huge influence from their mother. Okay, and mother has a lot of influence in their mathematical ability, and I think the same thing can be said about how mother nurture their children in terms of going to, not forcing them, but a huge influence in, instead of giving them a little doll, giving them something different. It's not something about bias against certain sexes, but we subconsciously made the choices in education, and that's tremendous, and we don't see the impact until 20 years later. Mm-hmm. And if we're talking about futures, maybe everybody would think about this when you have children or something. This is very important for the futures of this field. Yeah, this is.
Thanks so much.
Thanks, yeah.
Are there any questions?
I'll just say a couple of things in closing. So ETFs we didn't really talk about. Joanne would have spent time. It's one of the fastest growing sectors of finance right now. There is an organization called Women in ETFs. It just crossed 1,000 members. So there are a lot of women in some of these new areas that are growing rapidly. And another thing for those of you who do want to take the risk to do a startup, and yes, it will be very long hours, but having started a couple companies myself, I think it's it's wonderful when they succeed and you get to see the fruits of your labor. There are organizations, Golden Seeds is one that I'll mention, that is actually all successful women from many careers, not just from the financial field, but from consulting and advertising and the law and industry, and actually have put together a fund now. There are chapters all over the country. There's one here on the West Coast that exclusively invests in startups and largely promotes women doing startups. So there are organizations that will help you. You know, I don't know if you want to call it the beginning of the old girls club, but it's, you know, there are avenues out there that we didn't have, you know, 20 and 30 years ago. So, you know, go for what you're interested in and reach out to the support network.
Gudrun, did you have anything you'd want to add?
No, I don't.
It's sort of, and I don't want you to leave thinking that it's impossible to figure out where the new opportunities are, what's going to be exciting. I think that we've really highlighted them here. It's look at where the spending is, where are companies spending money, what are they prioritizing with their dollars, and it's clear cybersecurity is ahead of the game there. And as Tanya said, you know, what shortens the line, what takes out cost, what reduces fees, because inevitably when we can get to spend less money to get what we want, that will be huge.
Well, and showing the ambition, if you're really interested. I mean, maybe Katie, you could just share the story of when you went into financial writing, and because I think it's an example. It's really an example of someone deciding they were going to do something and then doing whatever they needed to do it. And I think it's a terrific story. You should share it.
Financial writing was, it's different now, but it was always pretty male dominated. M&A reporters were men. Because you had to work crazy hours to do it. And when I got to the US, I'd lived in China for about 4 years, and I was a freelancer. I covered travel and art and music and politics, and it was great. So I got to New York, and the jobs available to me that paid money, they were not internships, were writing about finance, which I knew nothing about. So in my interview, which I still have no idea how I landed, and I'd failed a test.
Well, tell them what the test was.
The test was about, you know, financial acumen. So very basic questions. Name 3 companies on the Dow, which at that point I couldn't do. What happens to yields when bond prices go up, which I did not know. You know, just these very basic things. So I got to the interview part where I think that the man's job was to really politely escort me to the door. And I said, well, here's the thing. I don't really have an ego here. I'm gonna work way harder than anybody else. Like, I will tell you that right now. There's no question. I will do whatever it takes to learn what I need to learn, and I'll read whatever I need to read, and I'll talk to whoever I need to talk to, because obviously I don't know the answers. So when I call people, I'm going to say I don't know the answers. And isn't that what it means to be a reporter? To call somebody who knows more than you and say what's happening, and then try to translate it for people like me who are currently very ignorant about this. And he nodded a lot and said, well, we'll get back to you. But then he did, and when he did, he said, okay, we're going to take you up on the offer. You said you're going to work harder and that you're going to do whatever it takes. And I had also said, and if I don't, you can fire me. And he said, and if you don't, we'll fire you.
And here you are.
And that's how it started. And when I got involved, I actually realized that financial services is infinitely interesting. You know, you can write technical stories about derivatives, which, you know, not a lot of people wanted to do. I was actually interested in mortgage-backed securities, so it gave me kind of an edge when the financial crisis happened, that I knew what they were. But you can also write about the people stories behind it, the characters who drive these companies, who have huge personalities, and you know, you can also write about sort of how they affect the real world. Like, how is Bitcoin going to change banking? JP Morgan's going to look different in 5 years because of money transfer technology and Bitcoin. What Gudrun does is going to be completely changed because of all these security concerns and the fact that we can no longer trust a lot of the data that comes into our
We'll
networks.
be saying, and Gudrun, what can we do for you next?
By the way, that story is interesting, because how I got into the financial industry is when I was at IBM doing the outsourcing deals. I worked in all the different industries. I had deals in retail, public sector, distribution, you name it. And finance struck me, there was a lot of banking, a lot of Wall Street, as the most interesting, because it was at the time it was most dependent on technology. So they were always thinking ahead more. The problems were much more complicated, and it's all about solving problems. And that's how I ended up actually making the leap from a tech firm into working for an asset management company. And I don't regret it to this day, because every day there's something new. It's always changing. So that's my last minute advertising for you to go into the field.
There you go. Well, thanks so much for joining us. It was great.
Thank you,
I hope
guys.
you liked the conversation.